Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. It's going to be another interesting week in the fact that there wasn't a lot to talk about in this trade. We obviously saw beans go higher. Many folks wondering how high could it go. We'll look at some energy costs, a USDA report that is due out next week. We'll look at the technicals, the fundamentals.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back as we now continue with our program. We bring onto the screen Heather Ramsey. She is with the ARC Group, and Brian Splitt. He's with agmarket.net. And interesting week. I know I kind of talked about at the intro that it was just another one of those weeks, not a lot of excitement happening. But Brian, at least we were able to see a little bit of higher numbers in the soybean prices, which made the soybean growers feel pretty good.
Yeah, so I think, what we did coming out of the weekend, there was some major monthly resistance at the 1480 level on the continuous soybean chart. We had made a double top in July of 2021 at that level, about 3 weeks apart. And that was kind of the last gasp before breaking down into the fall lows. So the ability to get through that level on March really set the stage this week. And you can see the outcome. Once we got through 1480, by Wednesday we were making highs at 1564, and after that we consolidated. We've been trading in this 30-cent range, roughly between 15.30 and 60. And with the report next Wednesday, I would venture to say that we'll probably find ourselves either on the north or south side of that trading range. If we do break down a little bit, I think we'll go back and recheck 1480. That's going to be major support now that we're through it. If we have the wherewithal to break it in some new highs, then we might be looking at 16 beans here by the end of next week.
16 beans. I tell you, Heather, I was out in North Platte at the Buffalo Bill Farm and Ranch Expo. Everybody was talking about these bean prices and just what Brian said, wondering, could we see 16 or more? What are you hearing with chatter amongst your clients?
Yeah, we're definitely talking about all of these same highlights and headlines. And my job, I always tell the farmer, my job is to make sure that we make money. We're all about risk management. So when we have a year where any decision you make at this point makes you money, we need to be strongly looking at that. For clients who are really bulled up, obviously a lot of the discussion is, well, can we go make some cash transactions and keep some money flow going, turn around and buy back into this market on paper with calls and, things like that. So a little bit of that kind of back and forth chatter going on with some of the beans that we have left, also talking the same direction with corn, get some cash flow. I agree. Do things look rosy and super great right now? Yeah, they sure do. We never know how long things are going to last in the market. Nobody has a crystal ball to the market. So trying to get them to understand that even though the fundamentals and the technicals look very supportive at this point in time, we have to continue to take action. And so as we continue to take action, how do we fit the action in with the personal bias of the client at this point in time? So making sure cash flow is still happening on a regular basis for them through cash sales and movement of grain. But if the personal bias for them is that things are still going higher from there and they want to be participating, that's kind of the additional conversation we're having for this time of year versus, where we have been the last several years. So buying back calls to keep people more active or putting on those strategies that maintain upside momentum for them. Also looking out at the 22 crop and how can we protect value out there without handcuffing ourselves if a rally should continue. It looks very, very promising right now. The other markets that I think over the last month, we've seen a lot of work and movement in. Obviously, the front months have exploded. The 22 crop has definitely followed along at a certain percentage. And then you look in the 23 has actually done some serious work since the first of the year as well. And so I don't know how aggressive anyone really wants to be or can get themselves to think about from the farmer side on 23. But I think it's a number I've definitely brought to everyone's attention more frequently to say, let's think about this. How do we make this number work, or can we make this number work? And how do we make it work for your farm? If it doesn't work, we're not getting too aggressive at this point in time. But if that 23 number is something that looks appealing and we can put into sort of the metrics and the matrix of the farm and make that work, then we're going to do that. So just a lot of moving pieces right now. The market's done a ton of work for us as far as value appreciation goes, especially in the first, about 35 days of the year here. It's kind of impressive.
Mm-hmm.
When the statistic on soybeans is that old crop soybeans are over $3 movement since December 1st to today. Just mind-blowing where we're at and how quickly we've gone there. So definitely want to keep everyone actively engaged in this market environment.
So having said that, Brian, we do know that we have a USDA report coming out on Wednesday. Looking at what Heather was just talking, what you're having conversations with your clientele as well. Are we going to see a lot of positioning of these next couple of days prepping for this report?
Yeah, we were seeing a ton of volatility coming into this report, and I think in the days leading up to it, especially with a lot of the outside market forces, we're going to see this market very active Monday and Tuesday of next week. I think you're going to have an awful lot of expensive calls and puts out there. Generally before the USDA reports, you're going to see an influx of volatility premium into the options. So we'll see that take place. But I agree with what Heather's saying. I mean, you never know when the rug's going to get pulled out from underneath you. We're at very profitable levels right now. You look at new crop soybeans near 14. We're going to have an acreage report in the month of March at the end of the month. And I have a feeling that the acres for corn or soybeans will disappoint. We're going to have one of those is going to find itself severely overvalued, and we're going to have one find itself undervalued based on the moves that we've had here recently.
Well, as we continue here at the Nebraska Soybean Board Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoffs, let's look at the technical side of this, Brian. What are you looking at, and what's catching your attention?
Well, we talked a little bit about front month soybeans here getting through 1480, and I expect that to be a very pivotal area on the soybean chart here moving forward. We're running out of chart levels above us. 1571 was a major monthly high. We've got a 1636. And really, you get through some of these bigger picture numbers and there's not much left except for the highs back in 2012 up just under $18. So those are kind of pie in the sky numbers right now. Could we see that down the road with some problems here domestically and weather? Yeah, potentially. But this market has really made a lot of headway on a very short period of time. It's extremely overbought. I think when you look at the idea that we're going to have the USDA cut production in South America, probably not as much as the privates have cut it recently. So we are set up for a little bit of a buy the rumor, sell the fact. That might give the opportunity to the funds to reload a little bit at some support. When you look at corn, we're in an upward trending channel right now on March corn. These highs that we've had recently up in the 640 area have been at the upper end of that channel. The low end of the channel is down around the 50-day moving average, down around $6. So if we do see some short-term setbacks here in corn, which we have typically been making lows on these USDA reports and then finding ourselves turning higher afterwards, I think you'll see good support around $6 on the nearby corn contract. I think when you look at Chicago wheat, the July contract, which is the new crop, has a very nice, clean-looking potential head and shoulder bottom. We would potentially have just made the right shoulder on that. The neckline is up around the 820 area. So I've been personally looking at three ways, looking at owning the strike price of the neckline at that 820, has a target up around $9, and finding a put below the market to sell to help pay for that. And again, that's a way for a producer to potentially re-own some bushes already sold or look at the market in a speculative fashion. That's what I'm doing with it in my own account.
All right, Heather, are we putting too many eggs in one basket when it comes to dry weather in South America and dry weather here in the States?
Every market feels a little different. Obviously, every year feels different. I think it's very interesting that we're sitting here talking about dry weather for the second year in a row with South America. And to say that is going to pull us through and kind of sustain this market long term, I think is not reality. to various things that Brian was saying as well, just the market volatility and the amount of players, the types of players that we have in our market. We're trading every single headline. So as much as South America might be the story that's winning 3 out of 5 trading days of the week, there's still 2 other trading days of the week where we're trading a different headline. South America is a huge deal. Obviously, the weather down there, the production issues that we could have. But we also have all of these outlier things not directly related to somebody producing grain that are affecting the market. Obviously, Russia and the Ukraine, that is huge to all of our raw commodity markets here in the U.S. We've got some export issues. Can we get into certain places and not others? Obviously, right now, I think the soybeans this week went to U.S. soybeans became the cheapest soybeans in the world today. That's an ever fluid market as well, just like the futures market. Who is the cheapest place to buy grain from? I still think that the China exporting discussion, how much will we sell to China? How much won't we sell? That's a big, huge unknown as well. That could flip either direction at this point. So a lot of moving pieces. And then, to what we've been talking about, a USDA report comes next week. Nobody ever really knows what the USDA is going to say. We all have our best guesses, but they can throw a wrench into any situation as well. So we've got heavy report season coming, obviously production season coming for both hemispheres. There's a lot out there to be concerned with.
Real quick, Brian, energy markets, is that something we're going to have to watch in the next week or so?
You got to watch it every day. That's part of the inflationary atmosphere right now. You think back to 2008 in the marketplace where we were in that inflationary environment. Everything was getting pumped to new highs at that point.
All right. Well, thanks to both of you joining us this week. This has been the Nebraska Soybean Board Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff. And as always, commodity futures involve a substantial risk of loss. It might not be suitable for all investors.